Okay, today we're going to be talking about uranium. We're going to be talking about the investment thesis behind uranium that Rick Rule has said was the greatest investment returns he got in his entire career. And today we're going to be talking to Justin Huhn. He's Uranium Insider on Twitter and one of the experts, one of the main go-to people that you can get on Twitter and that I personally follow for uranium, investing, equities, and the likes. So without further ado, it's great to have you. I want everyone to know his brand is Uranium Insider. You can see the link for his newsletter and website in the description right there down below. Please hit the like button on the right side, the left side. Let's send this out to more people. Great timing, right, Justin? Because like everything's up like 10% today, huh?
Really good timing. Yeah. Thanks, Jake. Thanks for having me. I'm looking forward to chatting with you today.
So let's start with, I'd love to get into a little bit about you, but let's start with why uranium. Let's talk about the investment thesis, especially as it pertains to right now in the world. So why uranium? Why now? Why is this important? Why should I invest in this? Why should I care about this? Why is this time different?
All good questions. Well, I think to start would be to maybe frame the investment potential based on history. I know you've had a number of conversations with Rick Rule. I love those interviews. You guys have a great vibe together. It's awesome to watch. And he talks about his classic investment in Paladin, investing at 10 cents, it dropping down to a penny before eventually reaching $10 in less than 4 years. You know, that all happened in less than 4 years. And to quote him, he said, did I exit too early and leave a lot of money on the table? Absolutely. Did I make enough money that every time I think about it puts a smile on my face? Absolutely. It's such an incredibly volatile sector from an investing perspective that it's attractive to try and capture even some of that volatility, obviously to the upside rather than the downside. But so that's kind of the why, is the investment potential. Really, that's the core of it. To not even go into the fundamentals of the sector, but just historically look at the price charts for any of the equities that were around in the last run, and it's startling what can happen in this sector. So why now? It's been a really long bear market that we're just now getting out of in the past couple of years. So after Fukushima, Japan shut off all of their reactors. They had 54 reactors, I believe, and they shut them off over the course of a year, maybe two. It happened really quickly. And the nature of uranium production is that it takes a very long time and a lot of capital to get production online. So all of these mines that were coming online over that previous bull market that I just mentioned, that was 2004 to 2007-ish, they just kept producing. Kazakhstan, the largest producer in the world, was ramping up aggressively during the same time that Japan shut off their reactors after Fukushima. So the demand and supply dynamic skewed negatively from an investment perspective and for the uranium price perspective, starting in 2011 and didn't end until 2016. So there was just this precipitous decline for 5 years in the uranium price. And it's taken since 2016 to get back up off the mat. And so we've had a number of ticks, these little false starts where it ticks up and comes back to a slightly higher low, ticks back up, higher low, higher low. We've done that for 3 years now. And now we're in this place where we have overall global demand for uranium consumption by existing running nuclear plants is now higher than it was before Fukushima, even with only 9 of Japan's 54 reactors coming back online.
Can you say that one more time, please? Did
Sure.
you say the demand is higher than it was in 2016? What exactly?
2011 was the previous peak in demand before Fukushima. So uranium or nuclear was growing leading up to, like, in that bull market, the equities bull market, and leading up to Fukushima had been growing steadily globally. And Fukushima just kind of cut that off just like that. It was a 10% demand drop just almost overnight. And so it's taken this long to get back to and now exceeding what was the global demand for uranium.
Got it.
Yeah. Yeah. And that's with, like I mentioned, Japan only turning back on. I believe it's 9 of their 54 reactors have come back online. And yet still we're now exceeding the demand that existed before Fukushima happened.
Wow.
So it's been an impressive rate of growth globally. A lot of that's come from China, but there's dozens of countries now that have implemented nuclear reactors, and it seems to be just a fundamental growth story overall. The sentiment is changing for the positive. We even have like the environmental left that's starting to talk about the importance of nuclear energy, which has been obvious for anyone who looks at it without kind of an environmental bias, let's say, that's been influenced over the years from the news media, from the oil and gas industry and whatnot. That it's an obvious solution for baseload clean energy, and we're seeing that sentiment being echoed across the political spectrum, which is new. I mean, this is within the past couple of years, and even this year, we're just starting to see this in multiple countries, including the U.S. So we have this really cool situation where the uranium price has definitely bottomed. I don't think there's any argument about that. That was $18 in 2016. We're already up, 50-ish% from there. And I think we're at a cyclical bottom right now at about $29.50, $30 a pound. And it's pretty well understood and assumed that the spot market is pretty thin. It doesn't take a lot of volume of end user purchasing to actually move the price. And then we have this whole incredible fundamental backdrop of growing demand globally that's expected out through and beyond this decade, with existing mines that will be coming offline over the same period of time. So it's a very unique setup amongst commodities. And that's kind of really what got me interested in the first place. Was it was such a complicated sector that you can put an endless amount of time into it and still be learning something on a daily basis. Plus it's constantly moving and changing. There's politics involved in every country that does or doesn't have uranium mining and or nuclear energy. It's just this very convoluted mixture of politics and energy demand and energy growth, and a commodity that's very important and very controversial, and it's endlessly intriguing to me.
So we'll get into it being controversial, and we'll get into dissecting that a little and the environmental component. Get into that in a minute. But first, demand is higher than it was pre-Fukushima. And pre-Fukushima, the price of uranium was over $100 a pound, wasn't it about 140 or so? Is that correct?
Yeah, it hit 134 in 2007. It didn't stay there for very long.
So 134, we'll just call it 100. And right now it's about $30. I've heard that it cost about $50 if you include all in sustaining costs, including finance, approximately $50 a pound. So we're 20 below. And you're saying the demand is higher than it was. Where do you think so I guess two parts of the question. First is, and I guess they go hand in hand. One of the reasons supply was the price was so low, my understanding is because, as you said, the supply got pushed onto the market at the same time that things were getting shut down.
Yeah.
And so there's that component, which is how much supply is left. And then the second question is, where do prices need to be just for the industry to be healthy, given that something like 20% of the baseload power supply in America or the world comes from nuclear, which I didn't even know any of this stuff before I started studying you guys. I was like, wow, nuclear actually powers, uranium powers that much. So it is essential whether you like it or not. So then what's the cost need to be for us to have it? Maybe you could go in a little bit to that. That's sure. Kind of as far, like I said, my portfolio probably exceeds my knowledge base. And these are the main core principles that have attracted me to it.
Right. Yeah. Well, first, the peak price of uranium from the previous bull market was not really a result of supply demand fundamentals. That was kind of euphoria and panic buying. The market got squeezed by hedge funds. There was a lot of there were mine floods. MacArthur, I believe, flooded. Both MacArthur and Cigar flooded, and one of them flooded twice. I'm forgetting which one it is at the moment. So there are a number of factors that led to that. So it wasn't simply the supply, the demand was X, therefore the price is Y.
Got it.
It was much more complicated than that. So your number of around $50 for the cost of production currently is probably pretty close. The primary producers right now produce for less than that.
Okay. How much are they producing for?
Well, Kazatomprom is the biggest producer, and they've got a number of JVs with. They've got a JV with Cameco, JVs with Uranium One, JV with Orono, JV with the Chinese. So their cash costs are really low, like in the low teens.
Oh wow.
But they're all in, let's say, not even their all in sustaining costs, like their fully allocated costs when you're calculating the dividend they pay and everything else is probably in the low 30s.
Got it. So it's around this price level we're at right now.
Exactly. And then you have some other primary producers like Uzbekistan that produces a few million pounds a year, and they're pretty low. They're, similar production, ISR production as Kazakhstan. You have BHP with their Olympic Dam mine, that uranium is kind of a secondary production. It's primarily a copper mine. So they basically just sell at market prices. So they don't really even have a calculated, all in sustain. It's this excess thing that comes out of the mine, the copper. So they monetize it at whatever the market's paying.
Got it.
But there's a number of other producers that are hard rock mines that are producing that at a higher price than what is being sold now. And one of those is Cameco. And so that's why they've closed down MacArthur River. The only reason they have Cigar going is because it's mostly contracted out at this point from long-term contracts that they signed in previous years.
Got it.
So, yeah, and it's also a JV with Orono that's also sells into the spot market and has contracts as well. So, long story short, yes, the cost to produce uranium now is higher than the current market prices, but the real point is that we have a supply and demand situation that is going to require more supply to come on than is currently being supplied, and that's going to cost even more. So we have, we have like the idled Langer Heinrich mine owned by Paladin, and that mine they need $55, $60 to be producing, and it's expected that they will come back online during this coming market, and that the price will reach at least that level to incentivize that mine, as well as MacArthur River to be turned back on perhaps in the next few years if they can get some contracts signed at prices that incentivize that mine, which is probably in the 40s for Cameco. So, and then beyond that is just there's dynamics of the market that nobody can really predict, but we know for sure we need that $50 to $60 range to even reach this equilibrium for production to come online to balance the demand in the market. So whether or not we have any further disruptions to supply, like we did this year that nobody saw coming with COVID, whether or not we have hedge funds entering the market, buying physical pounds and removing that availability from utilities, we don't know these other factors. So the market's very fragile with very few producers that are consistently producing. So it's one of those markets where if everything goes perfectly smooth, we will get to $50 to $60, period. And that's probably within the next 2 to 3 years. And if anything else comes in and disrupts things, we'll probably go higher and likely sooner than that.
So what you're saying is no matter what, we need about 50 to 60 to bring a lot of these mines on, which, is a pretty steep move in the spot price and thus a pretty steep move in the equities. But you're saying if anything else goes wrong. And so let's talk about that and how that affects the above ground supply. And
sure.
So one of the things that's made me, that caught my attention this year with uranium was as I started to learn these types of things from people like yourself. And then I saw these mines getting shut down due to the government response to the virus. And so there was even more
shut. The way that you said that.
I did it on purpose.
I know.
So then in addition to that, like this week, I don't remember the company because I don't follow it as close, but one of these big companies like Camco or whatever just like shut down a mine again. And when I read it, normally that makes me mad, the government response that closes business, but that actually made me more bullish on it because I'm like, Jesus, how much longer can this go on? I mean, like this isn't a random commodity. It's essential to turn your lights on.
Yeah.
And so let's talk about the effects of COVID on the supply, where you believe we're at with the present supply, and how much longer till price squeeze.
So Cameco released news that they had a second case at their Cigar Lake mine, which was restarted in September. So they haven't shut that down again yet. I don't know that they will. I think they're doing everything they possibly can to, keep things running at the same time, make sure that people are safe. A bulk of their employees are coming from local First Nations communities, so they're very sensitive about having impacts there. But at this stage, it's kind of hard to speculate on whether or not they'll shut it down again. And I think that if they do, there's definitely have to have some kind of plan going forward about how to operate safely and avoid further shutdowns. And I don't expect that it would be a long shutdown if they did have to shut it down again. But it obviously would probably trigger some movement in the spot market and the spot price. The other big story with impacts with COVID this year was in Kazakhstan. So Kazatomprom, they shut down their well field development for 90 days. And right during the heart of when they're typically drilling like mad. So with the ISR mines, basically what happens is you drill a series of wells. There's injection wells and extraction wells, and you inject the wells with sulfuric acid and you pull it out. It runs through the ore body, the aquifer essentially, and you extract the mineralized fluid, and then that gets processed. And the way that it works is that the decline rates are really, really high. So when you first drill a set of wells and start to acidify the ore body, you go quickly up to the peak production, and it doesn't stay there for very long, and it immediately starts declining in productivity. I mean, you can just imagine like 2 straws in a bathtub, and you're injecting the sulfuric acid on one side and pulling it out on the other. It takes a minute for all of the ore body between those 2 points to become acidified. And then at that point, when it's fully acidified, you have a peak production. And then from there on, it just declines.
Got it.
So they have to continuously drill and drill and drill and establish these well fields to maintain those levels of production.
Got it.
So with their particular shutdown, they were maintaining fluid flow in the existing well fields, but they stopped the well field production for 90 days.
Okay.
And so what happens is when you establish well fields, which they restarted, I believe, in August, you've got 2 to 3 months of actual well field establishment, a little bit longer to actually get the sulfuric acid into those new wells before production starts. So it's actually somewhere between 6 to 8 months, I believe, from the moment when you start drilling to when you're ramping up production into that new well field. And the way that their timing worked out is they needed to essentially acidify these new wells they were drilling in August, right around winter time, which is extremely, extremely cold in Kazakhstan. So there's speculation that their acidification is probably being impacted by winter already. January is the coldest month of the year, followed by February and then December, in that order. So right at the time when they're supposed to be acidifying all of the wells that they started drilling after the lockdown is right in the heart of winter. So I believe they're going to see pretty significant impacts to their production in 2021. They already had I think it was around a 10 million pound hit to production in 2020. And it's
because
probably
of COVID?
Yes.
Okay, so that because of government shutdowns and mines went down and JV partners. So that was my next question. So 10 million pound hit so far. How much do you believe has been hit in total in 2020? For instance, like First Majestic, Keith Neumeyer, silver company. First Majestic posted data because this has affected obviously all commodities. The government response. I mean, first of all, you've got depreciating currencies, which should bring the prices of commodities up. But then you have a decrease in production across the board because the government's not allowed things to run their businesses. This affected obviously everything. And so there has been data published now, and I forget it off the top of my head, like maybe an 11% decline in silver production this year. Is there any estimates on how much there's been a decline this year in the production of uranium?
Sure. Yeah. Well, we had Cigar offline for 6 months, so that's about 9 million pounds. And then we had Kazakhstan estimate around 10 million pounds. Actually, you know what? I believe they upped that number in their during their Q3 report. I think so. I think we're in the low 20s.
Low 20s. And how much pounds is used a year by, for instance, I mean, globally and then America?
Globally, about 175 to 180 million.
180
and
million.
In America, about 45, somewhere between 45 and 50 million.
Wow. So we've lost at least 20 something million. How much has been mined still this year?
Let's see. I think it's about 120 million.
So we haven't mined enough uranium this year to meet the global demands of uranium this year.
Oh, no.
Jesus Christ. And so then the next question is, well, how much supply is left? Because that's, I mean, first of all, that's a legitimate, not only national, but global security threat. How the hell do you not mine enough of something that you need to flip the switch and make your lights come on? So like how much that's like, so that's those numbers. I mean, those is a real thing for everyone listening. Those numbers.
Yeah.
You don't have to know anything about. You have to be an idiot like me and look at it and go, "Holy shit, that looks like dollar signs." So, how much is left? Or I mean, how are they making the lights come on still if they're not producing that much?
Right. Well, there's a couple of things. I mean, one is just the global supply excess that happened after Fukushima. That added a lot of pounds for a lot of years.
How much?
Hundreds of millions of pounds.
Got it. And how much of that has been used?
A lot. We think the most of it. So, estimated maybe around half of that excess supply went straight to China, which is not coming back into the market because they're growing so incredibly fast. They have a big inventory. They have somewhere, 300 million pound inventory.
Yeah. Americans need to realize that China is not they pretend to be your friend. They're cornering all the commodities right now.
Yeah.
And they know, and they think they just got these idiots that they think they're harmless. So they've got taken half of that. What about the rest of that?
The rest of that, it's taken the supply deficit to work through that inventory. Yeah. So we believe that the mobile inventory that was created from that excess will be worked through in 2021.
Wow.
Yeah.
So then we're basically immediately at a deficit here pretty quick.
Right.
Is what nobody knows 100%, but you think we're pretty close to that.
Right. Yeah. And another piece of that too is there's secondary supply that comes into the market. So even though we had, let's say 120 million mined supply this year, we had around between 20 and 25 million. It's difficult to nail these numbers down, but it's somewhere in that ballpark of secondary supply, which much of that comes from underfeeding. So underfeeding is basically the enrichment process is when uranium. Okay, so I'll just go through the fuel cycle really quickly.
Cool.
The uranium is mined, hard rock mined, open pit or underground, or ISR, like we just described with Kazakhstan. That produces something called U308, the U308 or yellow cake as it's known.
Got it.
That material gets converted at a conversion facility into uranium hexafluoride, which is a gas. That material then gets moved to an enrichment facility where that UF6, the uranium hexafluoride, is spun in incredibly powerful and fast centrifuges to separate the U-235 and the U-238 isotopes, which have a very tiny difference in mass. And so the U-235 isotope is the fissile isotope, and that's the one that gets concentrated. My cat is jumping up on my desk. Sorry. That's the one that gets concentrated in order to produce energy, essentially. So natural uranium is about 0.7% U-235, and it has to be enriched up to anywhere from 3.5% to 5%.
Got it.
So what happens is the enrichment process, it produces all of this excess material. So the centrifuges are set based on the resulting tails material or the excess material to what percentage U-235 the tails will have. I don't want to get too deep in the woods here, but basically what happens is you produce this concentrated uranium, and then you have all of this excess tails material that has some amount of U-235 in it.
Got it. And they're recycling and enriching that to create more supply. Got it.
Whenever enrichers have excess supply, let's say, excess, what's the word I'm looking for? Excess capacity to enrich.
Got
They'll
it.
be spinning tails to produce more enriched uranium.
Got it.
Yeah, exactly. And so there's I think out of that 25 million pounds of secondary, the bulk of that is coming from underfeeding, from enrichment. Now, one key point of that is that supply has been slowly coming off and will come off even further as the enrichers have an increasing amount of their capacity being used to spin fresh natural UF6 because of demand. So as demand increases from utilities buying fuel, essentially, that more of that capacity will be used to spin that natural uranium and less of it will be used to spin the tails. So the amount of underfeeding is expected to decrease as the demand for enriched uranium increases.
Got it. Yeah. So I guess that kind of answers the question that I think a lot of people have, and I've noticed in financial Twitter world, there are a lot of similarities between uranium and metals or miners investors, in that there are a lot of very emotionally scarred gold and silver mining investors that got in at the wrong time over the last 10 years. And they have a high cost basis in the equities, and they become, rightfully cynical. They were in for too long. They got in at the wrong time, and it's just bad luck. And they say basically, the gold rally's dead, the silver rally's dead. And I notice a little bit of that crowd in uranium from the limited time I've spent studying online. And there are a lot of people that say, it always does this. It's going to go back down again soon. And they're rightfully emotionally scarred, and maybe they're in at much higher prices and they've gotten clobbered. And then they hear this interview and they say, those dreamers. And so I guess the question is, why is this different? And is the answer basically that with the government responses to what's happened, it's really squeezed out the rest of this supply, and we're really heading down to the apex here on how much longer we can last at these price levels? Or what would be the real answer to why is this time going to be different? So yeah. Right.
Yeah, that's a good question. And certainly there are plenty of people that have been scarred by entering uranium too early and still down on their investments at this point. I would say that one of the positive things about the fact that we've had a number of head fakes and it has taken this long is that the weak hands are just so thoroughly flushed out here.
Yeah.
I mean, anybody who's just done with this investment, they've gone on to something different. They're in precious metals. They're chasing Tesla. Who knows what they're doing, right? So yes, there's still a certain amount of despondency amongst uranium investors, but the weak hands are they're so thoroughly washed out at this point, and there's a lot of new energy and a lot of new enthusiasm coming into the sector. So why now? Well, definitely 2020 was a pretty big kind of black swan as far as helping to squeeze out some more of that not secondary supply, the mobile inventory. So an additional 25 million pounds that would have still been around has now been consumed essentially by that hit. And I think that there's more coming in 2021 because Atomprom is not, they've given guidance that they're expecting a normal production year in 2021, but I don't think that's going to be the case.
Are they smart enough to realize that if they can hold off a little bit longer, as executives, they're going to get very rich? I mean, you would think they are. I mean, what's your thoughts on that?
Well, I think, yes, they're definitely smart. So there's a couple of answers to that question. One is that they have something called subsoil use contracts. So they are a publicly listed company, but they're still majority private, and they still have to answer to the state essentially. So they have these subsoil use contracts that dictate their production, and they're allowed to flex, I believe it's 20% up or down from that number. And right now and last year and for next year, they've already said that I even think they said it for 2022, which is interesting, that they're going to maintain that 20% reduced number. So that's not a production cut. If somebody tells you that Kazatomprom is cutting their production, they're not really cutting their production. They're maintaining a production level at the lower limits of their allowance.
Okay, understood.
Yeah. So that's one part of it. Of course, just because they're producing doesn't mean they have to sell it right away. They can still dictate those prices. But I believe that they have a desire to maintain a market share. So right now, if they allow the prices to just go nuts to the upside, that incentivizes projects all over the world to immediately be profitable. And even though those projects will take time and capex to bring online, it's still not something that they're necessarily interested in. Being such a low cost producer, they can absolutely crush it with uranium in the high 30s, low 40s, which they're doing. I mean, they're essentially selling, short to midterm contracts, let's say 2 to 5 years in the mid to high 30s right now. But they're not a bottomless pit of uranium. So they're producing about 55, let's say 60 million pounds a year total with all their JVs. Their attributable from that is about half, so low 30s. And then they have offtake agreements with China and India that takes probably about half of that production. So in reality, they only have maybe between, let's say, 15 and 18 million pounds available to sell in any given year. So they're currently selling out some of this future production in the high 30s, which is really interesting. So yes, do they have the ability to control the market? I believe they do. So does Cameco. They can dictate prices, but they also want to maintain that market share. So it's a constant balancing act for them.
So what do we do? Like lock the executives in their house so they can't get out? It's the same thing that Barrick and Newmont did. Barrick and Newmont are not good. I don't like those people. They've done the same thing in the golden. George Bush Sr. was on the board for Barrick Gold. Give me a break. What does he know? I mean, it's price control by controlling the supply. It's the same thing. Do you worry at all about? I mean, it's not as much of it is political. Obviously, it's a very political sphere, and when you go into the Uranium One and the Justras and the Clintons, of course it is, but it doesn't compete with fiat currency. Whereas there's a lot of people concerned about the manipulation of price in metals. Do you worry about a manipulation in price from these companies to keep the price at this level? Or do you think it at least has to get up to the 40s and 50s just for the sake of making our lights come on?
Right. I don't worry about it precisely because of what I just mentioned about their actual production numbers.
Got it.
I mean, knowing what the global demand is.
Which was global demand was 180 million.
Yeah.
Okay.
Yeah.
And they only have 18 to 20 available. That's what you said. So it's really not that big of a deal.
Right.
Okay.
Right. Yeah. I mean, it's being the largest producer and essentially setting the price is a big deal, but
Okay.
they don't have an unlimited amount of uranium.
Got it.
And eventually, they're going to see the writing on the wall, which I believe they already do. But they want to maintain market share, but they're limited in what they can do. And I don't think they've been way more responsible when it comes to market dynamics and their means of selling than they ever have since they've gone public in 2018. So they were huge spot market sellers in the 2010s before they went public. I mean, they essentially were largely responsible for just crushing the global uranium industry in the 2010s because they just ramped production so hard. They came out of nowhere and were growing so quickly and were just selling, just flooding the market. And they're not doing that anymore. So that's an extremely positive sign. Yeah, they're definitely operating in a much more responsible manner.
That's good to know. So then let me ask you, let's talk a bit about the money and the investment and the potential of that. So if we're at $30 and you say you think, in the short term, we've just got to get to 50 to 60 as a base level or so, that's a 40 to 50% move, somewhere 35 to 50% move in the price per pound. How does that affect the equities, do you believe, if the run was just, let's say, to that range?
Who knows? I mean, the equities are flying right now and the price hasn't moved. It's really, I think the upside has no limits because you don't really have normal kind of cash flow dynamics when it comes to valuing these companies. Most of these companies aren't producing a single thing, and they have valuations that they're not producing a dime. In fact, quite the contrary. So how do you even justly value the companies? Like you can't. You can give a very rough estimation of the enterprise value versus the pounds in the ground that they have. That's one metric that some people use to judge valuation of companies. And I guess that's something, but it just gets so wacky when things go to the upside. And it's difficult to say. Like, we have to compare things to the last market. When we're talking about the price of uranium, we're not even thinking about the inflation that's happened since 2007. We're not even talking about the hedge funds that could potentially come into the market and squeeze things. Now we have a whole different world of social media that's sharing the story nonstop. So there's a number of factors that could really influence this market to really fly to the upside. I think there's 10x potential on the big caps, I would say, in the next 2 to 4 years, and 30 to 50x in some of the small caps. Of course, that's assuming that the price goes where we think it does, 60, 55, 60 or more. And the companies, operate in a manner that delivers value to shareholders. But it's difficult to say. I mean, so
you're saying you believe in big cap in the majors. You believe there's 10x potential just it doesn't need to go break all-time highs. Right. You think for that type of a move that you're discussing, you just think it has to get to a healthy level where more mines can come online and companies aren't, losing money left and right. You think that's 10x in majors and minor and juniors could have a 20 to 50x potential. Obviously nobody knows, but I like to think of these conversations like you and I are just basically sitting on the couch brainstorming how we're going to take over the world with our investments. And that's you're the expert in this space. So these are the kind of numbers that you visualize in a reasonable scenario. We're not talking about $100 uranium or anything out of control like that. So you think that this then, I believe Rick Rule said his worst uranium investment was a 20 bag or 10, it was a 20X during whatever year that was. And there wasn't that many uranium companies, but there still aren't that many, 64 or so. So how do you believe the potential of this market matches up to the previous market?
I think I would say less, only because we're a little bit higher. The previous market started after just an excruciatingly long bear market where absolutely nobody was interested in the space, and there were 5 or 6 companies left, and the price, got under $10 a pound or something like that.
Oh wow!
So that was just absolute despondency. So we're already at a place where some of the juniors have already done a 20x.
Right. They have, right.
So I would say that the potential for that massive move is not necessarily there as much as the last one, but I would say that the story is more certain and the fundamentals look stronger. And, there's still some really small cap companies out there that could show up in a big way and make pretty handsome returns, and there's also stories that have not been written yet. And there's plenty of companies that I'm sure are going to come into the space. They went from, like I said, just a handful, a half dozen companies in 2002, 2003 to, I think it was north of 300 or 400 companies by 2007.
Wow.
And now we're back down to about 60.
Wow.
So,
not very many.
Yeah. It's hard to say. And it's also, to quote Mike Alkin, who's like, him and Timothy Chalairi are two, like the biggest and best, most well-known analysts in the space. They do incredible work. And they, Mike says, we know where the market has to go. Anything beyond that is just gravy. And I just think that's a good way to put it, because there's no way to predict what might happen that will impact supply in the next 5 years. And we know that it's got to get up to that 55, 60 range.
Yeah, as a base level, which, is less sexy than the other numbers. But if you break that down, you really go, if Camco or a major can 10x, man, some of these small guys, could do wonders. Yeah. It still sounds like that's something to get excited about, that if you have enough invested in it, it could be life-changing. It could still be one of those things that helps you retire really early, and you tell your grandkids about, and you can cash out of the matrix pretty quickly. So you still see it as one of those matrix exit plan strategies.
I like that. Yeah. Oh, for sure. That's for sure. And I believe that we're going higher than that 55, 60, only because.
Come on, there we go, Justin. Come on. Yeah. We need some of that. We need some of that.
Well, I'm not saying that just to be overtly bullish, but there's nothing really all of that logical and smooth in this market. It just doesn't move because the production takes so long to come online. There's jurisdiction risk, there's politics, there's immense capex. You're dealing with radioactive material. It takes so long to bring new production online and then on top of that, the fuel cycle that I described earlier, going from mine supply to conversion to enrichment to fabrication to fabricated fuel to delivery to the nuclear plants, like that's a minimum 12 months.
Got it.
If that's ISR production that's physically geographically nearby the conversion and enrichment facility, that's 12 months. If it's mined hard rock supply that's got to be shipped far long distances to conversion facilities and then shipped again to enrichment, we're talking 18 months plus. So when you have utilities that have some uncovered demand, like they've got needs for fuel that are 2-3 years out from now, they need that fuel now. Like they need to start buying. If they're going straight to uranium, they need to do that now. Now, of course, if there's more UF6 or EUP, enriched uranium product, that's available, a lot of times what the utilities will buy farther up the fuel cycle to shorten that timeline of delivery. But there's, eventually the source material has to continue to come into that cycle to balance the market. And, the utilities, for the most part, they're kind of playing hard to get right now. They're looking for what we're hearing with Cameco, for example, and they talked about this in their last conference call, is that the utilities are asking for base escalated contracts. So these are contracts that would have sort of a fixed price at the base, and then would escalate based on some metric of inflation and expected market prices by some percentage year over year as they get deliveries year over year. And Cameco is not really wanting to sign that kind of contract. You know, they know that the prices are going higher to the point where they don't want to pin themselves down. And a lot of these contracts, you know, what's an ideal contract for Cameco, I don't exactly know, but what they've done historically and what Kazatomprom is doing now currently is that the contracts are primarily majority spot referenced. So they'll be like 60-40 spot and term. And so 60% of the contract will be at a price that is the spot price upon the time of delivery of the material, whereas 40% will be at a fixed price. So Cameco is probably looking for anywhere between $45 fixed,
okay,
with some percentage of that contract reference to the spot price, which, you know, it's right
Jesus,
now.
they better not mess up the whole fucking bull market by signing something too low that doesn't allow the movement in the price. But that sounds interesting, doing the 60-40 if the base load was 40 to 55 and then they had some movement swing for the price. Because I agree with you. I mean, with the amount of money printed, with the devaluations of currencies, with the rampant speculation and the amount of money out there, I mean, I think it's possible, I mean, that you could have a far crazier market based off of nothing other than what has happened in almost every market so far, except for commodities.
Yeah.
So I guess that sounds like that could be a potential threat, but it sounds like Cameco, from what you're saying, they're smart enough to make sure that it doesn't put a peg on the market.
Right. And it's partly that, but there's also, you know, for a company like Cameco to sign contracts at a price that's too low, it has more further effects than simply capping the price. Because, well, first of all, they need prices higher than what we're at now,
okay,
in order to justify their production. Like I said, Cigar is operating because it's mostly contracted out. They've already got contracts in the 40s and 50s that are paying for that production.
They're already getting contract. They're already paying. So
signed from years past.
Oh wow! Okay, wow.
So they'll sign, you know, 5 to 10 year contracts, you know, 5 to 10 years ago, and they're producing now to fulfill those contracts.
So are we at the negotiating table here soon for all these new contracts? What do we need to start driving this spot price up?
Yes. Cameco is wanting these contracts now, and they have been some discussions. There's been very small amounts that have been contracted for Cameco. I don't know if they've done any contracts this year. I think maybe one small volume. They did a couple of last year. I think they did 30 something million pounds term last year, which is not a lot. So, you know, when the bull was really raging, the last market, you had between 100 and 200 million pounds a year being signed in the term year.
Oh, wow.
Contract. Yeah. So what happens is when there's a rush for supply, contracts are signed far in excess of what's actually produced on an annual basis. So it kind of so it's like, yes, MacArthur, Langer Heinrich come back on in the next, let's say 3 years or something, and we have a balanced market. But what's happening is utilities have waited so long to sign those term contracts that if the material they need is not available in the spot market, which some will be, but most will not be.
Got it.
And they go back into the contracting market and secure fuel out into the future in far greater volumes than are produced on an annual basis, which is why the price skews so far in both directions.
So we need new contracts to get the spot price to start moving? How do we get the spot?
Not necessarily. No, the spot market is more, it's interesting. It's like they both influence each other, the spot market and the term market. The spot market, so last year when we had a move from like 24, 25, it went up to about 34. That wasn't last year, that was this year. It's been a long year. That was Cameco buying heavily in the spot market.
Oh.
So what we had is so there's 3 primary locations that are the conversion facilities. There's Cameco's Port Hope, there's Commurex in France, and there's Converdyn. This is on the east coast of the States. It's not actually running right now, but it's still a delivery location for material. And Cameco was buying so heavily that the premium for price for uranium delivered to Cameco's Port Hope facility was what went up to that $34, $35.
Oh, okay, got it. Interesting.
And it was I think it was at least 10% at a premium to the other two locations. But really, what moves the spot market is spot market purchasing, or trading. Even pounds traded back and forth between traders, not even between end users. Let's say that will move the price if. Did
you hear that, traders? Go out there. Let's start moving this thing.
Yeah. Anybody can buy uranium, I guess. But yeah, so really what we need to move the spot market is more spot market purchasing and or more long-term contracts signed that are at a higher price than what we're currently looking at now. That's really, increased demand is what needs to happen. And the utilities have been largely out of the spot market. And I believe that's because they know how thin it is. And any significant volume in the spot market moves the price right now. And a lot of these utilities also still have some contracts from the past with fuel that's being delivered that's partially referenced to the spot price. So if you go in and buy from the spot market and it moves the price up, you're kind of screwing yourself in a way because whatever the pounds you're getting delivered, you're now paying more for those because the spot market moved up. So what's primarily moving the spot market now is producers buying, is Cameco and Kazatomprom. They've been buying a little bit, and they need, in my estimation, they need somewhere to the tune of 10 million pounds that they're probably going to be buying in the next 6 to 8 months. And Cameco, same thing. They need around 10 to 12 million pounds.
Wait. Are you saying 10 million just for each company? So 20 million total?
Yes.
Or were you okay?
Yeah. I think Kazatomprom, they're probably expecting that their production will be back close to normal by the second half of the year.
Okay.
So I'm expecting their purchasing to happen sooner.
So that's 20 million coming out of this remaining above ground. And we've already went probably close to an hour. We could probably make this 8 hours. So everyone comment below too if you want to see more. Maybe what we'll do, Justin, if you're interested, is we can make this multi-part because there's so many things still that I wanted to cover. Exit strategies. I wanted to talk about the environmental component and the updates and technology with it, the long-term effect, the long-term place that it holds. There's still so many questions that I wanted to cover. But I'm excited. This is getting exciting. So I guess, what do you think about that?
I'm open. Yeah, anytime.
Okay. So, 20 million is what these people have to buy, and that will be off of squeezing this above ground supply more.
Some of that I'm sure will come from existing mobile inventory, but there is production that's coming into the spot market consistently. It's just not in huge volumes.
Got it. You
have like BHP's Olympic Dam, the Uzbeks sell a little bit into the spot, Uranium One sells a little into spot. These are not huge volumes, but it's there. And then the underfeeding that I mentioned before.
Yeah, exactly.
Yeah.
Okay, so a couple quick questions. Number one, where's the price? Fun time. Where's the price of uranium going to be this time next year?
I'm going to say low 40s.
Low 40s? Okay. Next question. How much do the majors move by this time next year?
There was just a price target put out on a buy recommendation from one of these analysts that came out yesterday that they expected to see Cameco $27 on the Canadian side. It's about $21 for the US side, which was, I believe, about a 75% price increase. That's pretty substantial for the big cap to move like that. So if we do see uranium in the low 40s this time next year, I do think, the mid to large caps could be at a 50 to 100% gain from here. 50
to 100% then puts some of these small guys maybe having the potential to have a 3 to 5x, maybe some of them a lot more, but 3 to 5x in 1 year. The potential is there. Yeah, that's a little bold. I would be I would be happy with a 1 to 2x next year. I think, just to put this concisely, I think 2021 is going to be really good. I think we have one decent consolidation coming between now and the next considerable leg up. Okay. I think that is going to be
one of our last times to buy at anything resembling kind of a low valuation.
Okay.
I think the remainder part of the year is probably going to be strong. And then I think 2022 to, let's say, 2024 will be kind of the real moves.
So you think 2021 is the setup year and 2022 to 2024 is the real bulk of the run?
Right. But I do think 2021 is still going to be really good. So I don't think it's, if you're really thinking as a contrarian, the setup years have passed as far as like buying the dirt cheap low. But we're going to see, it's not going to go up in a straight line.
They still are pretty dirt cheap though, right?
They are.
Like I'm looking at, I have a good position in UU and Energy Fuels. If I look at their chart, they were like at $63 or something like that. And I forget what they are right now. They've had a nice little run, but like they're still like, what is it like?
Well, you
it's
have
like
to,
250 or what?
With that particular chart, you have to take dilution and a reverse split into effect. So it wasn't actually down. We're not actually at that same amount of decline is what the chart represents.
As I told you, my portfolio exceeds my knowledge base.
No, but some of the ones that haven't diluted as much or done a reverse split are still way down, especially when you compare to the uranium price in 2016. Some of these stocks are flat or down or up, less than 50% when the uranium price is way up from those lows. So it's, this is still the first inning. Don't get me wrong.
Got it.
I would watch out for good entries in the coming. If we see a strong seasonality move, if we see the uranium price start to move now-ish in the next few weeks, we're going to get a really good move seasonally that should probably take us into February, March. If the uranium price doesn't move, we'll probably pull back from this rally sooner. So, but anytime between now and like the second quarter of 2021, dips are to be bought, in my opinion.
So we'll talk about the exit plan when we talk next time, because no one's going to be exiting in the next 6 months. We still got a few years for that. So you're saying a lot of these things are still severely undervalued. What do you think is the number one most undervalued company right now, if it was just number one?
That's a tough question. I would have said one of the funds, one of the either Yellow Cake or Uranium Participation, but the discount to NAV has closed quite a bit. So that's, that's a really tough one because they've all kind of rallied in the past couple of weeks. So I would probably, without actually saying a name, I'm going to say look for the remaining small caps under 20 million that have strong management. There's a couple of gems in there.
Awesome. So let's see. It's a whole probably 15 minutes to talk about the environmental component. There's where it goes, where it fits in long term. But let's leave it like this. So recently, I had lunch with the CEO of, I won't say the name of the company, but big publicly traded gold and silver company that sells on the NASDAQ. I don't know, maybe like $13 at US dollars. So, big company, smart guy, got his hands in a lot of places. And I said, what about uranium? And he said, it's done. He said, uranium's done. He said, I wouldn't be touching that. And he said, there's so many more better renewable ways. There's the stigma around it. It's done. He said, I would not touch that. I'd put your money here instead. And he told me where, and I don't want to go into that much more details on him, so it doesn't give away who it is. But that was what he said. Really smart guy, not like some random idiot on Twitter. Smart guy. That's a multi-millionaire, knows the commodities market. He said, it's done. Go here instead. What's your response to that?
He makes some points about renewables. There's certainly an upswing to renewables, but as far as comparing renewables to nuclear, it's apples and oranges. And It's not done. It's a growth story. I mean, it's set to grow 1 to 3% a year for the next 20 years. I mean, there's 50 something reactors under construction and like 300 planned. I mean, it's growing. It's growing even in the countries. And the sentiment around like SMRs and advanced nuclear is a whole nother subject that we probably shouldn't even get into right now. But that's absolutely on fire, and nobody knows how much that's going to disrupt the market. But I mean, I understand where he's coming from, because it has destroyed investors in the middle of the last century, of the last decade, excuse me. It's absolutely destroyed, and people are done with it. But it's a growth story, so I don't really know how he can say that it's done, because demand is actually set to grow, and supply is set to come off. So, I mean, there's no new major mines to come online in the next 5 years. Zero. There's none. We have a couple on care and maintenance that are big mines, MacArthur and Langer Heinrich. But the setup is, in my opinion, it's phenomenal. So I don't know how he can say it's done. I can see how he could say that he's not interested in it as an investment. But I think that just to say that there's not, that nuclear is not a growth story is just kind of ignorant to not look at the actual numbers, which are abundantly out there. But it's a complex market to understand. And to be fair, it does take a decent amount of time to wrap your head around it all and to feel a sense of confidence in the market as an investment. I totally get that. And that's part of the reason why I got into it in the first place, because I was intrigued by the investment potential, but I didn't really feel comfortable with it before I understood it. And so that's kind of what inspired me to dig in. And I mean, I don't know what else to say.
Awesome. So your response is basically, the supply has shrunk, the demand is growing. And I found it interesting, a tweet you made where you were referencing all the new reactors going on. And there's probably a lot of these people that are going to listen, or people that follow you and follow uranium, and they think I'm an idiot. But there is also people that just invest in silver and gold that maybe don't know that much about it, or they're learning more. Hopefully there's some new people that are introduced to it through it. And what you're saying is, at the core, for those of us like myself that are more newly introduced to it this year, the growth story is quite simply, there's reactors all over the world that are set to come online, but there's no new mines. And that's kind of at the core. Would you say that summarizes your response to what that individual said?
Yeah, for sure. Yeah, that's a pretty good summary. Yeah, there's just, in order, I mean, look, there's no shortage of uranium in the world. I mean, it's in the seawater, for God's sake. It's everywhere. It's just a matter of bringing that uranium into production. That takes a very long time and a lot of investment capital that isn't going to happen at the prices that we're currently at. So when you can roughly model out demand, and you can roughly model out supply, you can see there's a disconnect, and either the prices go up or that supply stays offline. I mean, it's as simple as that. So
yeah, well said. Yeah. So let's do this. Everyone, leave a comment down below and let me know if you want to do this again. It might be cool to do this every week or two till we cover this whole theme, because I'd love to talk about the coexisting between all the greenies and nuclear, which has been interesting. Things I've learned from you, the lack of the carbon emissions, the updates in the technology. Because there's people, when I did my Rick Rule interview about this, somebody commented and said, "Unsubscribing, never will watch a video of you again. Don't you know how bad uranium is?" That was an actual comment I got.
Really?
Yeah, and wow. I think part of that is a lack of education of one, the updates that have made it safer for the leaks and things like that. But also two, I had no idea that it was a no carbon emission fuel, that it actually coexists with this whole green agenda that the lefties want to push. Bill Gates is involved in it, and a lot of these types of folks. So I'd love to cover all that in more detail, and we could talk about exit plan. Would that be something you'd be interested in?
Yeah, anytime. Let me know. I'd be happy to come on again for sure.
So stay tuned for episode 2 of the Uranium Insider. But first, your website's obviously plastered behind your head. But for everyone, where can everyone you got a newsletter. I'll put your Twitter in the link, but if anything in conclusion you want to say.
You can find me on Twitter at Uranium Insider. I'm pretty prevalent on there, and I do my best to respond to messages if anybody wants to reach out. Uranium Insider Gmail, and obviously the website if you want to check it out there. We do have a newsletter. It's 100% uranium focused. We've been around since last August, so about 16 months. I think that we've done a pretty good job. Our portfolio is about 100% return since then. And I think
we go.
Yeah, we're doing good. And it's just, we're highly, highly devoted to the space. And so we put out an extremely comprehensive letter once a month, and then bulletins as needed intra-month with developments in the space and any company news on the companies that we hold or recommend. So would love to have some more new folks there. And if anybody has any questions, reach out on Twitter or email, either way.
Cool. Everyone check that out. Make sure you hit the like button on the right side or the left side over there to send this out to more people. Leave a comment down below and let us know if you're interested in this, questions that you have that I didn't cover, that you want to see covered in the next episodes, and exciting times right now. So thank you very much.